My dear students, in Financial Accounting 1, we have a topic by name subsidiary books. Accounting cycle begins with a transaction and recording them into a day book by name journal, then again posting it into ledger, then a ledger balancing, making up trial balance, then posting it into final accounts. This is broadly the accounting cycle, but it is a lengthy process where first of all we need to write journal entries. But my dear students, there are some transactions which will occur every day, like purchases will be there, sales will be there, cash payments and cash receipts will be there. So keeping in mind of all these recurring transactions, the day book journal is subdivided into 8 parts. The 8 parts is known as subsidiary books. The subdivision of journal into 8 parts is known as subsidiary books. So why we have to subdivide means to avoid the lengthiness in the process of accounting. So writing journal entry and giving narration, then it will be posted into ledger. It's a lengthy process. So division of work will be there. When we have separate books for purchases and sales and purchase returns and sales returns, you will be able to say statistical data regarding how much is purchases, how much is sales returns likewise. So division of labor will be there, statistical data will be there regarding purchases and purchase returns and sales and all. So keeping in mind, we subdivide journal into 8 parts. So after posting them into the subsidiary books, again this will be directly posted into ledger accounts. Means here we are avoiding writing of journal entries. So purchases book is maintained to record credit purchases. Listen carefully what I am saying. Only credit purchases we need to write. No cash purchase will be recorded in purchases book. Then my dear students, purchase of assets cannot be written. For example, if ours is electronic showroom, whatever electronic items we are purchasing for resale purpose, that only we are going to record. If any purchase of assets like furniture and buildings, that we are not going to write. That keep in mind what is kind of business you are doing, what is the stock in that only recorded in purchases book. It's very clear, no assets will be recorded. And if trade discount is given, now question arises, what is the meaning of trade discount? So every shop is having some kind of price list. On the price list, if any discount is given to the customers, that is known as trade discount. We won't show trade discount anywhere. However, the billed amount will be deducted. Okay. A trade discount obviously differs with cash discount. Later we will discuss about that. Then purchase book will be like this, my dear students: date, particulars, end up, inward invoice. Why? Because when you are purchasing, goods are coming into the business, then amount. Okay, don't write to or by. Okay, just write the date, write the supplier name and their particulars, give the ledger folio number, inward invoice number, if any is there you write the amount. Then purchase returns, if any goods are returned to the suppliers, we need to prepare purchase returns. At the time of making purchase returns, we will prepare a debit note. Simple example I want to give. Purchased goods from Hari, purchases account data to Hari account. Return goods to Hari, Hari account data to purchase returns. Means again his account is being debited. So we prepare purchase, in case of purchase returns, we prepare a debit note. Okay, then sales book, only credit sales are recorded. Sale of assets and cash sales cannot be recorded here. Then sales returns, here we will prepare a credit note. Then cash book, my dear students, you keep in mind there are various kinds of cash books like simple cash book, 2-column cash book, 3-column cash book, and petty cash book also. Okay. Then bills receivable and bills payable. In the due course of credit transactions, there will be some bills receivable which are given by the debtors. To suppliers we are giving bills payable. To keep a record of that, we also maintain bills receivable and bills payable book. And if any entry which is not pertaining in the above 7 subsidiary books will be posted into journal proper. In journal proper, generally we write opening entry, means the last year balances are being taken over to the here. Then closing entries, adjustment entries we are going to write. transfer entries and all. Say for example, rectification entry means we paid rent 5,000. So instead of writing 5,000, we have written only 500. So again 4,500 we need to write. Then we paid rent. Instead of writing rent, we debited advertising account. Rent account is to be debited and advertising account is to be created. Likewise, adjustment entries we are going to write. Means, my dear students, at this time you should have a very thorough and clear idea what to write in subsidiary books, what not to write in subsidiary books. Keeping in mind, in purchase book and purchase returns book, we record only credit purchases and the returns made to the suppliers on whom we purchase goods on credit basis. And in sales book, we record only credit sales. We are not going to write cash sales. We are not going to write sale of assets. Okay. There are various kinds of cash books. Cash book is a real account, my dear students. Like whatever amount that we receive, we are going to write it in the debit side. Whatever payments we are making, we are going to write it in the credit side. So subsidiary books are made on the basis of day-to-day transactions. We do analysis. What are the recurring transactions? To just get some relax from the day work, routine work. What we do is we directly open subsidiary books. We post them into the subsidiary books again. That will be posted into ledger. Later ledgers will be balanced and a trial balance will be prepared. Yeah. Make use of this, my dear students. This is one of the very important topic for BCom level, even for BBA students, for intermediate students also. Subsidiary books. If someone asks you what is the meaning of subsidiary books, the subdivision of journal into 8 parts. There are 8 subsidiary books, my dear students. What is a debit note? Again, I want to say at a glance. At the time of purchase returns, we prepare this note indicating that the supplier account is being debited with whatever amount of returns that we are making to them. Then what is a trade discount? The discount allowed on the price which is displayed on the price list is known as a trade discount. We won't write any journal entry for trade discount. That will be deducted from whatever billed amount. For example, if you are purchasing 7,000 rupees worth of goods, if trade discount is 10%, 7,000 minus 700, you are going to write the remaining amount only. Like that, my dear students. See the proforma also. This is very easiest one. Easily you can learn. This is a very important topic in financial accounting 1, my dear students, and even for intermediate students. Thank you for watching. Please do subscribe to my channel for more and more updates. My dear students, learning of theory is more important. I can explain 1 or 2 problems how to do and all, but you should have some idea. What is the meaning of subsidiary books? Why we have to do subsidiary books? What are the uses of subsidiary books? What is a debit note and what is a credit note and what is a trade discount likewise? Okay, at a glance. If you have any doubts, my dear students, feel free to message me. Definitely I am going to respond. Thank you. Signing off, Venkat Danam. Please make use of the theory class on subsidiary books. Very important and very interesting. Easily you can learn. Usually you can attempt in exam also. All the best, my dear students. God bless you all.